Hello everyone, great to see. If they don't have a mortgage, if the owner doesn't have a mortgage, so then you can actually buy as the owner's financing, or you can make some kind of a deal with them. So that's typically, it will be very helpful for you for the number of reasons. For you to purchase that, obviously you need to get a mortgage with the mortgage rate today, plus to go through this whole financing, to submit all the documents, to make sure that you get approved for the loan. So typically it's more expensive versus with getting like owner's financing. And with the owner's financing, the closings are typically much faster. So that's one of the things that I would definitely suggest for you to do, is to take a look and see if they do have any mortgage on that. That's another thing that we can talk and explore, like how you can approach them. I personally bought few of my properties like that with the owner's financing. So it's just, it's much faster. There's obviously, depending on what kind of deal that you put together, you can let's say buy like for 5 years with no prepayment penalty. Once you turn this whole thing around, it's going to be much faster for you to refinance. Also, another reason is why you would want to buy the owner's financing is because like that probably was another challenge why someone else cannot buy this property. Because look at it this way. Now you're buying this commercial building. For you to get a loan on this empty building will be very challenging until you're going to give cash, all cash. There's no tenants. There's no income coming in. So with the commercial, the way the bank is going to approve you for the loan is they're going to look at the rent roll, but there's no rent roll. Then they're going to look at your income and they're going to see, okay, is it enough with your income? And then obviously with the rent roll, I mean, you do have the company, so we'll need to make the calculation and see then how much you as the company can pay for the rent for this property to make for the bank to approve you on that. But what I'm trying to say, so that's another reason why it would be much easier to do the owner's financing. When there's owner's financing, so they are the ones who literally, so let's say, for example, if it's a $1 million property, instead of you going to the bank and going through the whole loan approval, submitting all the documents, the rent roll, and go through this whole approval, appraisals, closing cost for them to approve or not, you can literally go to the owner and say, okay, here's what we're going to do. I'm going to give you 20% down payment. I'll give you 200,000. And then the other 800,000, you're going to loan me 5-6% for the next 2-5 years. With no prepayment penalty, you do the contract, you sign the paper. So for them, they're not losing anything. They're making money. They're selling the property, and at the same time, on the money that they're lending to you, they're actually making interest. So that's why for them, it will be a very great idea too. But for you to even propose that, first you need to know, do they have a mortgage? So if they have a mortgage, that's a completely different story. If they don't have a mortgage, then that would be ideal for them to do this owner financing. So let's say if they have a mortgage, so that's why again you want to do a research. So let's say they have a mortgage. So now next thing is you look, okay, when did they take the mortgage? What's the rate on this mortgage? So let's say if they took a mortgage 7 years ago, 8 years ago, when the rate was very low. So what do you want to ask them now? You want to research. I mean, you don't even need to ask them today. Today you can research all this yourself. So what you can do is you can research and see, okay, what type of mortgage they have, for how long, and what's the rate on the mortgage. So if it was like 8-7 years ago, the rates were very low. So the next thing, when you're going to speak to the broker about the purchasing the deal, you can actually ask all the questions. Would be the okay to do the assignment of the mortgage? Does that mortgage allow that? Very valuable insight for you, because since this property is not generating any income right now, for you to get a mortgage will be challenging. Okay, so now the third thing now you have to calculate. Let's say owner's financing is out of the table. There's no assumable mortgage. Now you have to think, okay, I want to buy the property, but now you have to calculate what would be the cost of acquiring the property, plus the closing costs, plus the monthly payments, plus the cost to do all the renovations. And then how long it's going to take for you to turn this whole thing around to start getting the income.